This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending November 14th, 2020. Our question this week is, what is a stock buyback? The answer will be provided later in the video. This week, the market was mixed. The Dow Jones Industrial Average and the S&P 500 finished the week up, but the Nasdaq finished the week down. The Dow Jones Industrial Average increased 1.37% on Friday and was up 4.08% for the week. The S&P 500 increased 1.36% on Friday and was up 2.16% for the week. The Nasdaq increased 1.02% on Friday but was down minus 0.55% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 ended up, and the Nasdaq ended down. On Tuesday, only the Dow Jones Industrial Average ended up, while the S&P 500 and the Nasdaq ended down. On Wednesday, it was only the Dow Jones that ended down, while the S&P 500 and the Nasdaq ended up. They were all down on Thursday, and they were all up on Friday. The new unemployment claims were 709,000 versus 740,000 expected. Continuing unemployment claims were just under 6.79 million. Berkshire Hathaway was reported to have purchased $9 billion of its own stock. President Trump has not conceded losing the election. Pfizer reported that its coronavirus vaccine is 90% effective. The Democrats and the Republicans still haven't agreed on a stimulus deal. And coronavirus cases are setting new records in the U.S. New unemployment claims, continuing unemployment claims, stock buybacks, presidential election results, vaccine trial results, congressional stimulus deal talks, and the lack of progress, and new coronavirus cases are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be is corporations. Corporations will do what they must to drive the stock market higher. And particularly, they will drive their own stock higher. Which brings us to our question of the week. What is a stock buyback? A stock buyback is when a corporation buys its own stock. Corporations become corporations by the fact that they sell their stock to the general public. However, they sometimes buy their stock back from the general public. Buybacks used to be illegal, but they became legal in 1982. The effect of a corporation buying its own stock back is that it creates additional demand on the stock, which in turn can drive the price of the stock up. Do you own any stocks? If not, why not? Are you afraid that the market may fall? The market will fall again at some point. It always does, but when? Who knows? I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending November 14th, 2020. I trade at least three of the stocks on the list every week. The strongest performer on the list this week was Moderna, ticker symbol mRNA. It's in the first column. It increased 23.38% for the week. It was up 1.8% on Friday. Moderna is a pharmaceutical company. They are developing a coronavirus vaccine. They are expected to announce the results of their third stage trials. I did not trade Moderna this past week, but I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from using the Southside trading strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of November 14, 2020, my portfolio is outperforming the S&P 500 Index ETF SPY. Year to date, my portfolio is up 23.13% versus 10.91% for SPY, a difference of 12.22%. I am beating SPY by 12.22%. This week, equities, including puts, calls, and ETFs, make up 63.35% of the portfolio. Cash is 36.65%. The cash flow generated for this week was 2.13% of the portfolio account value. The account value changed by 0.42%. Meanwhile, the S&P 500 ETF SPY changed by 2.27% this week. I sold contracts on 9 positions this week, 4 calls and 5 puts that range from $254.05 to $456.69. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds, Makes Money Off Wall Street, by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.